a little hard, but it's just gonna make it easiest this way. All right,
Oh,
let's do that.
that's fine. Here. All
Okay,
right, so
all right, you can start.
basically investor relations. Yeah, I'm just gonna need you to just search up the definition just so we can get a grasp of what it is. But um, yeah, this investor relations. So look into the first image right there. So yeah, investor relations, a division of a business whose job it is to provide investors with an accurate account of company affairs. So essentially what that means is many businesses, well, usually businesses actually have websites or like dedicated parts in their website in which they give you access to their annual meetings, calls, where they like discuss how they did in a year or how they did in a quarter. And then the what's really useful about what they give you is like you can use a lot of their like slideshow presentations and pull data from what they like officially give you to paste on your stock reports. So let's use Phillips 66 as an example. Garrett, go ahead and search that up. Yeah. So you can just go on their normal website, for example, right there. Yeah, just a normal website. And then you have that tab right there that says investors. You're gonna want to go there and go into introduction first. Right there, they give you quarterly earnings that I just talked about. They have reports, they have transcripts, for example, for their videos. And right there, you have the second quarter conference call. You can actually go through their presentations and pull a lot of interesting data that they have there. And yeah, you can also get a good amount of videos that you can use. So just go back into the website there. Yeah. And then just pull out the presentation instead. So, for example, when I was researching this, I could just go through some of the most recent stuff that they've been doing, and like this is what their priorities are, and then you go down, and then here you can pretty much use all of this data and to just paste on your stock reports, and it's kind of just like adds that visual depth to your stock reports as well as giving insight into how the business is doing. And so I'm just gonna give one more example, and that's gonna be Globe PLC. Search up Globe, Ferrro. Yeah, that one. You can just go to the normal website home. Um, oh, uh, it usually wasn't saying that on mine, but it's fine. All right, yeah. So they give you some data here on their for their investors. You want to just click on investors there. Yep. And then go down. And then you have their annual general meetings and reports that you can go through. So, for example, 2024, if you want to view their 2023 annual report, you can click and download their documents and data, which is pretty useful. And then they also have earnings calls on YouTube if you want to go through them and actually listen to what they've been saying. So here, actually, what insight I got from from the 2023 annual report was that 2022 was a very successful year compared to 2023, in which their earnings actually dipped quite a bit. So it actually gives you a good amount of data and like overviews as to how the company did in the certain year based on their views. But that's pretty much it for the investor relations.
Yeah,
Yeah.
and just to add to that really quick, I just want to show you like some of the visuals we used when we were creating our reports. Just a second. So for a Bluebird, did this one. This Some of the visuals on this were really good. Just wanted to show off these. I mean, most websites, like I said, have these investor relations, and they're really easy to use too, because companies, of course, they want you to invest in their company. But you can come down here, presentations. We can look at their. I usually look at the fiscal year report. If I can find it. We can. Let's see, school year. We can just do the quarter one. It doesn't matter. Let's see. See, these are really, really great stuff you can use. Like I used these last year when I created my report. I would just, copy paste this, link this source. but they provide a lot of statistics that you can use in your reports, and some of these are very valuable. I like using these as the images, like I said. And yeah, that's pretty much it. I think Ion wrapped it up good though. And yeah. All right. So that was just short. We wanted to just add that to this
Do you want
webinar.
to do you want to show them really quickly how we put it on our stock report?
Yeah, we can show that real quick. So just looking back, let's see. We did Bluebird. See, we would take some of this. So this was all pulled. Most of these were pulled from there. We got some stuff down here. These were pulled from there. Yeah, from the investor presentation. This was pulled from there. Also this. So after dropping steel prices, so that was just one of the risks we identified. I really like this little visual they created to describe
Yeah,
what the company is focused towards. That was
we
on the investor report too.
yeah, I was just there if you were looking at the
Mhm.
thing.
And yeah, that's pretty much that sums up investor relations. There is more stuff on there, but that's just the basics. That's all you need to know. So for now, we're just going to move over to technical analysis. All right. So technical analysis is definitely receives some controversy sometimes. Um, you know, what you're going to see typically when you start looking at charts is you're going to see these line charts. But the problem with the line charts is they do not show like enough information on price. So in that case, I will switch to a candle chart. With candles, it identifies each. So in this case, it would be 1 minute. So this is actually live right now. We can see this moving, but let's just look back. So this is NVIDIA's 1 minute chart. Each of these little guys, they represent 1 minute. I'll describe in a second what each part of it means, each part of the candlestick. But each of these represent 1 minute in time. And in that 1 minute, there's buyers and sellers trading the stock, right? And in that case, the stock is either going to go up like a green candlestick, or the stock is going to fall down with a red candlestick. Now just remember these aren't like super important, these 1 minute, because it's only 1 minute in time. Price typically takes days or months to really make a real difference on the actual price. But like right now you can see that the company, this is a communication between buyers and sellers. You can see this communication because it's moving up and down. It's live right now. But looks like the sellers are taking control. They're pushing it down. And as they push it down, they just broke this level here. Looks like they're going for lower lows on the day. And yeah, NVIDIA is falling as of now. But just to sum it up, I mean, this stuff on a 1 minute chart, it may look when you spend all your time looking at it like this, you're gonna get really stressed out just because like falling prices like that. I mean, the stock moves really fast, but when you're looking at a 1 minute chart, I mean, 1 minute in time is not that much change in price. I mean, what do we have? Like a few cents, but sometimes it does move very fastly. All right, so that kind of sums up just that, and we're just going to look exactly what these candlesticks show. All right, so this was earlier today at 11:10, and this green candlestick appeared. Okay. So when this green candlestick appeared, it's okay. So another thing to add is that when you flip this, all it is a box and whisker plot. That's all it is. That's all a candlestick is. It's just flips. So the lowest low in this range, this 1 minute range, was down here. I marked it at 113.22, about $113.22. And then from there, the highest high in this 1 minute interval was at 113.95 cents. Okay. So during this period, the the price of the stock, it swings from 113.21 to 113.95. Okay. So that you can see that this candlestick's pretty big because that's a decently sized range during a period like that. And in this range, buyers were in control. Green represents buyers represents that buyers are in control, and red represents that sellers are in control. So during this range, buyers were in control. At the start, when this 1 minute opened, when the clock struck 11:10, the stock here, it opens at 113.30. Okay. This is why I have this blue line here, right? It opens at 113.30. And then it closed up here at 113.89 about, or just a little bit lower, 113.88. So the openings and the closings are also important to mark because that just kind of shows where the stock may go in that 1 minute period. So our close is up here, and something important to remember is that, like I said, buyers are in control for a green candlestick. So in that case, when buyers are in control, you open lower and you close higher because that means the stock goes up, right? Because when you go low to high, that's going up. That's buyers are in control. So that's just kind of the basics of the green candlesticks. They're bullish typically, but the different trends also show different like representations and meanings of these candlesticks. But that's just all you need to know about what exactly a candlestick is. All right. So let's move over to a red candlestick. So you're only going to ever see a red and a green candlestick. There's not a yellow candlestick. There's nothing like that. There's buyers and sellers. It's just the red and the greens. So the important thing to know about the red candlestick is unlike the green candlestick, it opens higher. Okay. Because when it opens higher, it's going to close lower. That's what you need to know about the red candlesticks. They open high and they close low because in that range, they open at a higher price and then the company lost some of its share price, so it goes down and then it closes at a lower price. Okay. But also in this range, like I said, there is a lowest low and there's a highest high, just like a boxing wizard plot. The highest high in this case was 114.34. And something to look at here is that, oh, whoops, I didn't mean to move that. Something to look at here is that this is actually a little trend you can spot is that this highest high was actually at the previous candlestick's open. So does that mean that this could be a level that when it comes up to here, it bounces off? And I think that is true. So as someone who sees technical analysis, I'm not just going to go too far yet, but I just want to show this real quick, is that when you are looking at a stock considering technicals, you're going to see things like this. So when I see something like this, where's my rectangle? There it is. I take the rectangle and I mark it. I mark it and then I do it longer and see if this trend holds truth. So I am saying that this highest high during this red candlestick is actually a level that the stock may come up to and hit at a later date because it also went down to this level here and it bounced right back up, bounced right back up, bounced right back up. So it seems like this is an area of support, or it's an area of resistance. When the stock was up here, it broke this level, so it broke the support. But when it's here, that support is now resistance. And you're going to hear support and resistance a lot because that is, I would say, yeah, those two terms are probably the most important things to know about technical analysis, support and resistance. Those are most commonly used. There's also indicators. We're not going to go too far into indicators. Just indicators, they can get messy. Um, I think some of you guys have used the simple moving average. I like the simple moving average. I have it here. Um, I have a 9-day and a 21. These do show information, but the like level and complexity of them isn't as good at as the actual price. Some of them, I mean, everyone has different ideologies when doing technical analysis also, so it is a little varied based on who you're talking to. But just in my case, I typically look at trends like this, and I'll show you why in a second too. All right. So I think we got that covered. The candlesticks. I just remember that our green candlestick opens at a lower price and it closes at a higher price. And the things that stick out represent the highest highs and the lowest lows in the range. And for the red candlestick, your open is higher and you close lower. And then you have the lowest low and the highest high. And that's just that that's all a candlestick is. They some of them show different things. But the cool thing about the candlesticks is that when I move to a 1-day chart, let's see if I can find it. There it is. So it's still candlesticks, right? But now these candlesticks represent one full day. So this was Wednesday, July 3rd. And during this period, it's still the same thing. It's still a candlestick. It opened down here and it closed up here, right? Because that's the green candlestick. And that applies for days, it applies for years, 5 years, but it can go pretty far. So we can see in the videos, let's see. They've been on the stock market since 1999. These candlesticks represent one full year now. And during that year, we can see that they opened down here, they closed up here. And candlesticks are really, I would say, versatile. You can use them for a lot of things. But they're always going to be consistent when you're doing technical analysis like this. So that sums up that. Now
You
we're
want
going to
to
what?
favorite replacement? You want to move on to favorite replacement?
Yeah, I'm right here. So a Fibonacci level is an indicator that I a lot of people commonly use. If I can get this to load real quick, let's see. Or actually, I'll get to that in a second. We'll go to HPQ. So you saw me draw the blue box when I was doing that because I saw a trend. And now I'm going to show you more closely what those trends look like. So let's see. This is a 1-year range. So this chart starts in August 1st, 2023, and it ends August 1st, 2024. All of these candlesticks, they represent one day, like we just did. So each one of these candlesticks is one day. And during this period, it seems as if it doesn't seem as if the company they did go up in share price during this period. Um, Now what I did is that I identified different levels during this period that seemed to hold price. One of them that I found was at around 31.13. And that's where I put this thing called an order block. They're just rectangles that you put on your chart. And these order blocks just kind of represent an area where volume spikes. Let's see. Yeah, you can see that here we have a huge, so this is volume. Just a brief introduction of volume. Volume is shares being traded. I think when I say, yeah, beta is typically a measure of it. It's volatility. When you have volume, you have volatility. Um, but the volatility doesn't directly depend on the volume. Your volatility also depends on the amount of orders coming in, rather they be buying orders or selling orders, right? Because when there's more buyers in the market, they are going to beat the sellers. But a lot of the times it holds present where both buyers and sellers have the same position, have the same like amount of people in the market. There's the same amount of buyers and the same sellers. And that's where you kind of see less volatility, but there may still be a lot of volume because they just may outweigh each other. So volume, uh, I use some volume indicators. Just for this, we're not going to. Volume something to consider, but I wanted to show for this the blue order blocks is that at this level, this was a high level of volatility. So that's why I placed my order block up here. Because now we draw this order block across and we see that it hits one, we see it hits two, we see it hits three, and then it breaks here. It holds for a little bit. So what we call that resistance. See, because when it's resistance, it just hits it back down. It hits the candlesticks back down. So it comes up here, boom, hits it down another level, comes back up, tries to break through the resistance, does not do that, hits down, and then it comes down more. It actually makes these legs. I'm not going to describe the legs right now, but they are also something you can do. It brings down another leg. So that really reinforces the fact that this is resistance. So from there, now we're looking for it to hit resistance again. But the problem with resistance is you have to make the decision between whether it's a resistance that will be a buy level or a sell level. Typically, resistances for selling. In this case, the company went up here. If you would have sold short, you would have made money. If you sold short here, you would have made money, went back down, and it also comes back up, hits resistance again. If you sold short, you would have made money, but then it takes and it knocks out that resistance. And now this resistance is support. Support is the opposite of resistance. It's going to be where your lowest lows are. Actually, a good level of support is here too. Let's see. See, we can see that as support here, um, the price comes down here, it hits once, it comes down here, it hits again, comes back down here, stays here for a little bit, and then it shoots back up. So now though, since we shot through resistance, this resistance is now support. So when you break resistance, your previous resistance is now your support. I'm saying resistance a lot, I'm sorry. But it is something important. I said it. It is like the probably the best terms to know about technical analysis is that support and resistance lines. So then it takes that and it breaks through this next resistance. I marked this resistance because it was previously used, and it beats that, comes back up, creates a new one, and now it's kind of lying in this range. These ranges like this, after a long cycle of constant price like that, these ranges start to get more unpredictable because there's not these levels. And that's where I sometimes hold off in trading. Technical analysis is something I consider. So like in this case, HPQ on my personal account, I have not bought HPQ yet because I do not like this level. So what I'm going to wait for is that for the company to come down to around here. And I think that would be good time to buy. So, but also technical analysis, it is not something you can, I would not say it's better than fundamental analysis personally. Like I said before, I would say 20% of our consideration for the purchase of a stock is goes towards technical analysis, but probably 80% goes towards fundamentals, looking at what the company does and their future. So technical analysis, just a summary, is just these candlesticks. It's typically what it is. There's also those indicators. We use those candlesticks like I showed, and also these order blocks. Just to before we wrap this up, I'm just going to cover one more indicator that I really like to use. It is called, let's see, it's called Fibonacci. I can't get this chart to load, so I'll just do it on here. Fibonacci levels, they are a sequence. You've probably heard them in math class and all of that. But pretty much they are a sequence similar to those order blocks, very similar to the order blocks actually. And now what I do is I'll take a 5-year range, and now each candlestick represents 1 week. So from that, I will go down here. We gotta move this view a little bit. I put this bottom part of the Fibonacci at the lowest low, and then our highest high is going to be up here. And now, similar to the order blocks, it kind of shows you those levels where there's high areas of resistance and support. So at this 0.382 level, we can see that the stock does come and it hits these a few times. It hits it again here, and then it bounces back up. But sometimes these resistance or these fib levels, Fibonacci levels, they are denied. I mean, this one really didn't show much. I mean, the 0.5, it kind of the stock kind of held there for a little bit, but it didn't do much there. But pretty much most of the time, the price of the stock comes near the Fibonacci, and that's where there's typically a switch in what the price does, unless it's driven by big news. But yeah, Fibonacci is a great thing to use. I would watch some more videos on it. That's just kind of the basics of it. We'll probably cover it in another webinar again, just to go a lot more in depth with it. But you can just kind of see those levels that get marked with the Fibonacci. And from there, I think I'm going to wrap it up. I don't want to go over our time on Zoom, so that's going to be it for this webinar. Just if you're still here, just wait for questions. And that's it. Let me stop this recording. All right.
Do you